In this discussion, I'm actually joined by one of my dear friends, Eric Wu, who's the director and main broker at Real Way Finance. Now, what's cool about having Eric Wu on the show is that he's an accomplished investor himself. And this is something you'll notice I like to do when I do catch up with various investors and professionals, is to ensure that most of them, if not all of them, do have a portfolio themselves as well. And the power here is that they get to share more, not just from a perspective of what they do for work, but always link it back to their own journey, their own thinking, their own portfolio. Now, Eric's built a multi-million-dollar property portfolio for himself. He's been investing for many, many years, I think going back to, close to the GFC days as well. And when it comes to the time he's had here, the clients he's served, having his input from a finance perspective is obviously valued. He goes through a few key principles when it comes to the finance world, which is all about that sort of preparation, planning, and thinking ahead long term. Now, all seem like some of the simple things, but often forgotten, which is what I see day to day when I do look after many clients as well. Now, if you do find value in Eric's, findings, thoughts, tips, it's important to get amongst a community that he's built, because this community that he's built alongside some of the admins in one of the Facebook groups I'm also quite active on has been very popular with nearing, I think, 15 to 20,000 members. So that's Property Talk Australia. And in that Facebook group, you'll also find Eric pretty active, myself pretty active, and we all catch up from time to time just to make sure we're providing some value, some recent data, research, facts, and just answering questions as part of a community. So if that's of interest to you and you enjoy today's chat, definitely jump in. It's a free group, lots of great questions, thoughts, opinions in there, and a safe community, most importantly. Eric, it's great to have you on, my friend from Real Way Finance. And I know, Eric, it's been a great journey that me and you've had personally for many, many years in terms of knowing each other. But it's now time to let the folks at InvestorKit podcast and everyone tuning in get to know a little bit more about you and what you do in the world of finance. So, Eric, without any delay from my side, I might hand the mic over to you to tell us a little bit about who you are, what you do, and a bit about your investing journey, because I think there's so much to learn from you and your investing experience in today's discussion.
Oh, thanks, Arjun. Thanks for inviting me to be on your podcast. I'm very honored. Thank you so much. Look, where do we start? It's a kind of a long story. We know each other for many, many years. We have so many mutual clients. Look, I really admire what you have done. I wish I am 20 years younger. Time can go back. I can learn from you as well.
Too kind.
Nah, it's true. It's some of the things I heard from our mutual client about you as well. Okay. Look, a little bit about me. Look, you probably can hear from my accent. I'm a migrant. So when we come here with wife and me, both adult already, it's hard to get rid of the accent. We start buying a property around about 2007. So that's the first home most people started. Then gradually we release some equity and buy new ones and rinse and repeat. Look, we will never thought about we'll be an investor from beginning. It's what we call accidental investors. Yeah, we see the work, so let's rinse and repeat. Yeah, so let's how we get started. In terms of what I do, so look, what we have as a new migrant, we change many careers, different work. So we settle on the finance business, which we started from 6-7 years ago. Look, it's kind of our finance this investing. It's kind of work well with what my experience. When people talk about property investing, for most of us focus on the property side. When you look a little bit deeper as actual finance, yeah, the property is actually a vehicle to realize your financial goals.
It's actually a really good point, because on the finance side, very few of us in Australia are running around with $1 million cash to buy a house. So I think it's so true that you say it starts there with finance. And I guess, was that the core passion piece for you that first started to say, hey, look, this is the part I had to navigate so difficulty through different interest rate environments, through different incomes, different jobs, as you said, before going into this. Was that a big part of what aligned the passion to say, hey, now I'm going to be in this world so I can help others do the same?
Yeah, look, I think you summarized really well. Look, for me, I like numbers, okay, like the strategy kind of stuff. So when you look at it, you kind of people's income, where they're at, the bank's policy, deposit, the borrowing. It's all like you put everything like jigsaw puzzle together. The puzzle itself is not set. It's kind of it depends on the person's goal. Then you have different strategy. Like when you do, let's say one person wants to buy something, or they have a financial goal they want to realize. You reverse engineer what they can do and what they should do. Yeah,
And
sometimes.
that's a powerful theme, Eric, like reverse engineering. How many people actually do that? Everyone talks about it, everyone's there, but it's such a good thing that you raise because so many people are focused on what's the next, what's the next, what's the next. But then you're always talking about, hey, hold on a minute. Can we think of the end and come back?
Yeah, look, I think you probably do that all the time as well, Arjun. I was thinking, so when people approach you, let's ask you, Arjun, what can I buy? You probably want to ask them, well, you would have already done that already. You probably ask them, well, look, guys, let's have a think of what do you actually want to do before we say, what will you buy next? The purchase thing is easy, but the long-term effect of one single purchase is actually can improve or can detrimental to your final goals.
It's a great point. And Eric, when you look at your own journey now, if we fast forward from starting the initial journey at 2007, which by the way, it's like 1 year into it, 2 years into it, the GFC knocks on your door and you got so much going on in the world. So that's pretty interesting time to start as well.
Yeah, it did.
But then
yeah.
now you come to 2016, 2017, you started the business. And I guess when you look at your portfolio today, if you don't mind sharing just high level in terms of the number of properties or the diversity, the overall portfolio value, because I do find inspiration as well, Eric, in speaking to you about your journey, as it's someone who I've learned a lot off as well.
Oh, thank you. You're very kind, Arjun. Look, I'll give you some very brief figure. We have a portfolio around about 7 to 8 mil, depending on which day you look at it. All right, the markets are different. I would say the LVR is between 50 to 55, 60%. Yeah, depending on which day you look at it. They're all different. Yeah.
And you've spread this across a couple of different states as well. So I think that's something I enjoy looking at your portfolio. You've had diversity, you've had size of portfolio, and you've had time, and you've had lower debt levels. That's a great combination of it all because it's so much learning that you can give across the client base that you have too.
Yeah, look, I want to say learning is shared experience because where I started at different time is more experience with shares, probably make other people less chance to make mistakes. Yeah, so look, we're all probably money across the two states, New South Wales and Queensland. I would say most of them have doubled, some tripled, even more. Look, again, it's a time in the market. I didn't think we bought at the perfect time, not a chance, because when we started, we didn't have any idea what we were doing really. It just feels like when you buy something, oh, this is an asset that will grow with the hope it will grow. Back then, there was very few like buyer's agent. Okay, there was a very minimal stuff to talk about, and also there's not many people to discuss with this kind of property investing. Anyway, it's kind of some in the back corner. Okay, we didn't even aware of it. So nowadays, with lots of help with purchasing, lots of research, you see, give you someone like you, right? You have so much data, the facts, or research back kind of research back up the approach to purchase, which state where to buy. Right? Back then, we didn't have anything.
Yeah,
okay.
I think it's such a big point, right? It's like there's so much option, but do you think sometimes that also can give people information overload because of how much there is today? And do you notice more questions coming from your client base today than maybe they did in the past?
Oh yeah, definitely. It's kind of Google's a good teacher, or good or bad, depending on how you look at it. And it can be information overload, overwhelming. The thing is, we're gonna pick up which is useful, genuine, which they're dressed up information or actually misinformation, right? This can be helpful or can be misleading. It does require lots of experience and some experienced people to unpack them to show you, okay, this is what you need to do. This maybe we can do it later.
Yeah, and then that's where you get the different types of reverse engineering and the where you can find the now, the later, and then where the portfolio goes. And Eric, that's a really good segue from your personal experience investing to actually your clients. And one thing that you've had with now 6 years in the finance world and more personally is you've seen great investors and go become phenomenal investors, and you've seen starter investors build portfolios. I'd love to pick your brains about a few common things, both outside of property investing and in property investing, you noticed amongst your most successful clients with building a portfolio.
Look, I can give you an example. I saw them start from one house. Now I have nearly, I think 7 now. Okay, I think for the most successful investors, for people who stop at 1 or 2, the main difference is determination, right? It's how determined you want to do it and how hard you want to try.
And when you look at that determination, Eric, is it like these investors that's mainly created a plan and then that gave them the determination to go ahead? Or was it still kind of unguided with a plan and it was just go as hard as possible, save as much as possible? Where do you find like the channeling of the determination came from? Was it because they had clarity or was it more because they just hard workers and hard savers and so forth?
Look, I think it's a combination of both, right? Initially, at the start, they really have a very clear plan where they want to go. And through the process, they form more clear plan.
Got it.
Right. The tricky part is some people started, once you bought one or two, they think, oh, we have done well. I don't want to push hard. The risk's too high. Then they stop. But at the point where they stop, it's actually far a bit further away from what they initially want to do. There are some people, when they started, lots of people say, I want a financial freedom, like $100,000 passive income per year. But with that, then you reverse engineer it. It's actually require lots of effort. There's lots of sacrifice, lots of strategies. Look, and also given the time, the finance environment for now, it's not that easy, but you can't give up. I remember.
Yeah, I think that's a determination piece you're talking about, right? Like it's not going to be one property, set and forget, and it's done. It's more about that determination to the greater plan of how many properties it may take to get there.
Yeah, let's give you an example. Look at yourself, right? Well, remember, first we're talking only a few years ago. Look at now.
Look, I pinch myself all the time. Eric. I'm grateful for it. Yeah.
Yeah, you've done really well. It's also sometimes it's the fear and complacent, really. So once people buy one or two properties, feel really, really comfortable, saying, oh, we have done well compared with the rest. We've been probably the 1% of the population. Let's complacent side. The other side of fear, look, if the interest go up again, if the tenant not paying rent, what are going to do? Let's think kind of turning point. Yeah.
And that's such a big turning point, right? In terms of like when the outside of your control factors come in, it's the person then that will go, okay, I'm either going to let this outside factor control me or I'm going to control what I can control. And that's kind of what you're saying there.
Yeah, you summarized it well. Thanks for that. Your wordsmith, Arjun. The other thing I want to give back to my example, right? The client approached us like 3 years ago. So they released large amount of equity. We know we're going to buy quite a few. So then we spread the risk. We use that deposit to purchase until so far 7 now.
Wow.
Like 3 years ago, right? 3 years ago, that's before the COVID. So now I think the net assets, the increased net assets from the time when it started until now, I think will be over 1.5 million net assets. Equity.
Wow.
That's very, very impressive, I would think.
That's a huge result. I mean, and outside of, I guess, their determination, do you find any finance strategies that you deployed were a key part of that as well? Because I think one of the common things you hear, the younger audience, and even just those in the starting their family phase, they commonly talk about the difficulties of borrowing in today's world. I obviously know there's that determination and their personal factors, but when you've looked at some of their finance and, between your experience as a finance broker versus someone else who might be a new finance broker, what have you noticed some of the X factors that you help clients get ahead with?
Okay. Look, when you do the investment, when you grow the portfolio, you need two sides, deposit and borrowing ability. So deposit can come from savings or come from your existing portfolio equity. Your borrowing varies quite a lot. You can borrow from banks only, which is limited. You can use third-tier lenders, right? Like a First Mac, Resmac, Piper, even Liberty. You can expand a bit more. So look, again, pretty much everybody has a limited borrowing. It's not like you have open check and you can buy as many as you want. It's not. So the borrowing is a very precious resource. You need to plan well as well.
Yeah. And, Eric, when you say that, what it reminds me of the people who might be tuning in going, I went to my broker and they said my borrowing was X. That to me proves that it's not X. It's like it's X for this first property. But then with other banks, with other tiers, with other rental income, with how much purchase price, how much income next year, how much income the year after, what you're really talking about is that there's this world of lenders. There's this world of multiple policy, this world of what the property you buy. And that's what it sounded like you really talked about. It's like, hey, it's not just a one loan, one bank, one lender, and that's it. You're really giving that customer the holistic picture to get the job done. So that makes a lot of sense in terms of what helps and that you provide in terms of what you do. Now, when you do flip it the other way around, Eric, and you think of those who get pretty stuck with their portfolios, what do you commonly see the mistakes they make, or maybe even some of the things they don't recognize on their journey?
Look, I think for the people we start as buying a home, they don't have the communication or experience share with other more experienced investors. They go for the cheapest rate, like some smaller lenders, online lenders, offer the cheapest rate, but there's no other services available. Like say you want to raise equity, very difficult. You want to offset account rather than redraw, difficult. You want to split the loan, not a chance. You want to increase borrowing, it's back forth, take very long time. Some banks are okay if you just want to buy or occupy home, nothing else, cheapest rate, that's fine. But once you start investing, you're going to plan long term.
Yeah, that's such a key point. Yeah, I guess it shows that you mentioned the word long term a few times today. It's like long term with the holding, but also long term with your finance planning, right?
Yeah, correct. They work together, actually.
And have you noticed, I guess, on this journey, a few particular things holding people back from what they're open to or not open to? Because I imagine on your desk, when you get different contracts and files and purchases, you see them from all walks of Australia. like from this state to that state, to smaller purchase prices to larger purchase prices. Have you picked up some other things that you noticed the good investors versus the maybe not so good investors do when they're on their journey?
That's a good question. Let me think about it, actually. I think the good investor, I think they, in terms of purchase the property or in terms of finance?
Yeah, a bit of both. I mean, what you notice when they work with you on those journeys.
Okay. Let's talk property side. So I find that good investors, look, DIY, it's not as good as with the help from professional like buyer's agent. Okay. Because with the buyer's agent, not only yourself, but some others as well, right? You probably one of the best. So you buy the good quality ones, right? You not only look at not overpaying it, you look at intrinsic value, okay? And also you look at the long-term holding cost, which means less maintenance in a good location and also good future growth perspective as well, right?
So there's more of a holistic view than the typical investor does on themselves. That's kind of what you're summarizing.
Correct. DIYs, if you have a lot of experience, it's fine. But if they first started, normally they will say, oh, people talk about this area is good. People talk about that area is good, so I want to buy here.
It's like wherever the today's news says is good, it's good today.
Yeah, it's go with the flow, yes.
That's a pretty great research process, isn't it, Eric? For such a big investment, $500,000, maybe more. That's the research process many follow. It's a strange one, and I really want to make that one of my missions of mine, help people never follow that research process again.
I'll do it quicker, Arjun. You're going to save lots of people. Some of the contract come to me and kind of scared. I'm told, do you know what are you actually doing? It's quite scary. Some want to buy the offer plan, new apartment. It's just making you feel, do you really want to buy it? Do you know the implications?
When you see all these offer plans and see these new apartments coming by, Eric, like there's obviously no shortage of these transactions happening. So people are falling for this all the time, buying apartments that haven't grown in 3, 5, 6, 7 years that look and feel good. I'm always intrigued to understand the other side of it. And by the other side of it, I mean when they're on the desk or Zoom or phone call selling to Mr. Eric Wu, Eric, I need you to finance this for me. And they're going to make this decision. And obviously you can't stop them from making the decision, but they're going to go make this decision. What are some of the things they say are the good things about why they make it, even though me and you both know the results? Why do they keep feeling so comfortable with this?
Look, I think it was sold part of it, sold the idea as a tax benefit. Okay, huge depreciations. And also give the impression, look, the immigration is so good that you definitely would be rented out. And also some rental guarantee as well. Less with the inexperienced investors, let's pretty much, they were giving the sweet appeal, but it's actually bitter inside.
The rental guarantee stuns me. It's like, why would I need to be appealed by the rental guarantee when the country's vacancy rates are 1% and below? Like, what guarantee more do I need? Something must be wrong with the property if something needs to be guaranteed in this tight environment. Isn't that interesting? And I think this whole tax depreciation side, and I know you'd see this on the self-employed clientele, Eric, and the salary clientele. The self-employed clientele, many of them are scrambling to pay tax, to show tax so they can borrow more. Otherwise they get stuck. And then you've got the other side going, no. I want tax back. I don't want to pay as much tax. It's an interesting dynamic in how the dangling carrot of depreciation is more important to people than the wealth. And I actually have catch-ups regularly with someone. There was actually someone who reached out to a consultation to one of our team members, and it was a very interesting story. And great incomes, great professionals, great savings habits, great savings in bank. And then about 7-8 years ago, they'd hold a property in Melbourne, and that had been a unit, and it hadn't grown it much at all. It's still the same value 7-8 years later. And you ask them about why did you make that decision? Tax, guarantees,
yes.
Shiny. Feels good. And then you ask them now 7 years later, if I say the same thing to you, do you still want that? Oh, no, we just want growth. So it's such a good hindsight of way you've shown that's the most common things they ask for. But when you ask them 7 years later, 8 years later, they just say, no, I just want growth. Nothing else, just growth.
Yeah. Look, you look at this, right? The 7 years, look at the opportunity cost. The 7 years passed. Can you get a 7 years time back? Can you get a 7 years of the market growth back? Not a chance.
Eric, I know you do a lot with investors, not just from financing, but you help them so much in terms of creating a community. And I feel communities are great places for everyone to communicate, whether you're a 10th property investor or whether you're a residential transition to commercial, or whether you've just got questions about, finance or trends or your first investment property and you just want to speak to everyone. You do such a good job in the Property Talk Australia group on Facebook. Could you tell a little bit about that group, where that started, where that is today, how many members are there, things like that? because I'm part of that community. I really enjoy trying my best to help and answer some questions, but that group is phenomenal in terms of the great, I guess, vibes in that group and the actual information being shared. It's definitely something you've done, so hats off to you.
Oh, thanks, Arjun. Really appreciate it. Look, it's not my work. It's we have an admin team of four of us managing the group, and also you, one of the great contributor as well. So we started a group from 2017 or 2017 roughly. So now it's around about 16,000 people there. We just want to create a clean group, so no sales, no ads, not private messages. Look, you can have someone to discuss property around and have a hidden agenda to invite you to some seminars to sell you something, right? Yeah, because all the admin team, the four of us, we all very experienced investors. We can pick up some rubbish. Okay, sorry, we call it rubbish. They have something hiding behind it, so we will remove that kind of comment. So just a clean group, no ads. Yeah, and also you're a great contributor. Your regular posts have so much interest from people. It's a great group. I'm proud of it.
And if I'm not mistaken, there's over 20,000 people in the group now, or 25,000?
Not yet, just over 16,000, I think.
Phenomenal. No, that's a great community there. So, Eric, that's Property Talk Australia in Facebook community group there, and they can just reach out, search for that group, and be involved if someone's tuning into this.
Yes, please. I would love that as possible. You're welcome to, as long as you're genuine, not trying to sell people something.
Amazing. Eric, and for those who want to reach out to you, who've heard from you today and obviously experienced some of the things you've said about what makes a portfolio go well when those clients do follow it and where the ones do make common mistakes, and more importantly, even just knowing you and your journey, how can people reach out to learn more about how they can be supported by you and what you offer in terms of finance strategy and finance support?
Oh, thanks, Arjun. Look, our business name is Real Way Finance. Real Way Finance. So you can Google our name. So we have a website as well. You can leave a message. You can call me. You can get in touch with me on Facebook. It's all fine. We're happy to chat. We're happy to help you. We're happy to look at a portfolio, see whether we can improve, what we can do about it.
Fantastic. Eric Wu from Real Way Finance and the admin as well at Property Talk Australia Facebook group. Thank you so much for joining. And if you're keen to reach out to Eric, that's the way to reach out to him at realwayfinance.com.au. And when it comes to Real Way Finance, Eric's personally built an over $7 million portfolio across multiple states. But more importantly, he's helped investors from those to realize what's possible, and those that have made mistakes, he's able to have those discussions with them and get them on the right path. So reach out to Eric at Real Way Finance. Thank you so much, Eric, for your time today, and appreciate it.
Thanks, Arjun. Really appreciate it.